What's the return like on your investments right now? Are you getting 3, 4, 5% return on investment? Or are you getting 20, 25, or even 30% return on investment? On today's Tuesday tip, I'm going to share with you what we're doing to get much higher returns than normal. Hey, I'm Andrew with the Roach Family Real Estate Team, and on today's Tuesday tip, we're talking about investment real estate. Now, of course, you guys have your real estate or your investments right now. You've got your stocks, your bonds, you're clumped into mutual funds. Maybe you have some paper or even maybe physical gold. But I bet you a lot of you don't have an investment property in your portfolio, and I would stress that you maybe should consider getting an investment property in your portfolio. So today I'm going to share with you our two buy and hold strategies. We've had lots of properties over the years, but we have two properties specifically for buy and hold. The first one was our kids' education fund. The second one is our retirement fund. Now here's the thing. The great thing about investment real estate, there's multiple things that are great about investment real estate, but I'll share a bunch with them. Number one is you get to leverage the growth on it, right? So what does that mean by the leverage? Okay, so the first thing is, of course, you only need to put 20% down for an investment property. So that means that you're going to put 20% down of the property and you're going to borrow the rest through a mortgage, just like you did on your personal residence. The second thing is you get multiple streams of income, okay? So the multiple streams of income, you've got your property going up in value, you've got positive cash flow on the property, the difference between how much you get in rent and your expenses on the property. Then you've got the mortgage being paid down by the tenant, not by you. And then there's a fourth stream here we won't go into too much, but it's from a tax perspective, okay? So you can talk to your accountant about this, of course, make sure that this is gonna be the right strategy for you, but you can depreciate the asset today, get a bit of a return or a kickback on your taxes, and then you'll realize those gains again later through capital gains, which is at a lower tax bracket. But make sure you talk to your accountant about that, because everyone's situation is a bit different and depends on what your strategy for the property is. Okay. So taking a step back here, I'll share with you our first property, which we bought 5 years ago for our kids' education fund. I figured, how am I going to save for 3 kids to go through university all at the same time, basically, and I didn't know how I was going to do it outside of through investment real estate. So we bought a property about 5 years ago for $330. Today, it's worth about $6, and the peak about $650. Okay, so let's go into that. So today it's worth $6. We bought it for $330. It went through an up and down, etc. So I just averaged that out. It was about a 14% growth between 5 years ago when we bought it at $330 and now. Now that 14% growth isn't my return on investment. My actual return on investment for that property has been, or if I were to sell it today, if I were to push the sell button and lock that in, would be a 73% annualized return on investment. Now, why is that so big? Why is that there's such a difference? The reason is because of the leverage and because of the multiple streams of income. Okay, so like I said, we've leveraged the property. We bought it for $330, so I put my down payment, my closing costs, land transfer tax, my legal fees, home inspection, etc. I put all that in. It cost me about $72,000, right? So we put that down. But all the growth that we've gotten between the $330 and the $600, that's mine, right? If I were to push that button, I pay back my mortgage and the rest is mine. So my return on investment isn't based off of $330, my return on investment is based off of that $72. Now you might say, okay, well listen, if I buy a property today, I'm not gonna get that big growth that we got into 2016 and 2017. Yeah, you're right, you probably won't get that. But you never know, maybe you will. But let's just keep it kind of modest, right? Let's just say that the property goes up in value only 4%. So let's take a peek back to my second property that we have. That one we bought about 1.5 years ago. It's gone up about $20,000 in that time, so which equates to about a 4% growth, which is pretty much what we all expected it was going to be. We figured that the market would kind of plateau a little bit and just go that nice, modest, nice and easy 4% growth, which is basically what we see. With that growth, with only 4% instead of the 14%, instead of it being 72 or 73% return on investment, it's 25% return on investment. Is that a bad return on investment? Not at all. If I were to say, okay, well listen, would you rather have 73 or 25? I'd pick the 73, of course. But if I was to look at my other investments that we have with our stocks and bonds, etc., we've looked at, the market's gone up and down, etc. I've gotten anywhere between a 4% annualized growth to a 12% annualized growth. Would I rather have 4, 12, or 25? I'd pick the 25, of course, right? And even in like some of the worst properties that I've kind of like looked at and assessed, even the worst ones were 17%. Now, I didn't end up going for that because I didn't think that was going to be a good strategy for me at the time. And at the same time, I also know that there's some better properties out there that'll get me the 20, 25, 30% return on investments. Anyways, I'm gonna wrap this up because this could be a really, really long video, and we can chat more about this offline. Just shoot me a message and I'll talk endlessly about investment real estate with you, of course. But for now, I just wanted to touch on that. Like, look at potentially adding an investment property to your investment portfolio. I'm not saying get rid of your stocks and your bonds and your mutual funds. I'm not saying fire your financial planner. I'm not saying any of that. I'm certainly not saying get everything into real estate and real estate's the best way to go. Not saying that at all. But I am saying that you should consider adding an investment property or two to your investment portfolio for your long-term growth, right? We all know that population is going up, and everybody is looking to move into the urban centers, etc. So we want to look for areas that have good growth lined up, and we could talk about that again on another video, of course. But we buy our property strategically, and we know where the market is going long term. It's not going to go like this. It may go like this, but eventually it'll get there, right? Anyways, I'm Andrew with the Roach Family Real Estate Team. If you have any more questions about this one, give me a shout. I'd be happy to talk about this kind of stuff. I can talk about it forever. But anyways, until next week, I'll see you on the next Tuesday's tip.